We own a stock that is positioned for extraordinary growth in a world where innovation and opportunity collide. This is an AI growth stock that is ready to split and take off, not just any stock. Settle in for an exciting ride as we reveal the mysteries that have piqued the interest of Cathie Wood's ARK Invest. You did really hear correctly. We're delving deeply into the revelations that might trigger a massive upswing. Please remember to hit the like button and subscribe to Tesla Stock News before we jump right into this exciting possibility. Come explore the frontier of AI with us now. Renowned fund manager Cathie Wood believes that investors in Tesla will reap significant benefits in the upcoming years. The stock of Tesla, which trades under the ticker name TSLA, has slightly decreased by 1.57%. In August 2020, it split its shares 5 for 1. In August 2022, it split its shares 3 for 1. These splits are evidence of the extraordinary increase in its stock price over an incredibly short period of time. The stock price has risen by an astounding 1,230% in the last 5 years. A $10,000 investment would have grown to an astounding $132,000 thanks to this exponential growth. Even though stock splits by themselves usually don't have a big effect on a business's operations, they can nonetheless send a strong signal to investors. Such a move typically indicates strong underlying fundamentals and attractive development prospects when it is made with the intention of achieving significant and sustained share price rise. Despite what some Tesla critics may say, Cathie Wood sees limitless possibilities for the business. Earlier this year, ARK Invest, her innovative and forward-thinking asset management company, released a valuation methodology. As part of an aggressive bull case scenario, this model projects Tesla's share price to reach $2,500 by 2027. For Tesla's shareholders, this suggests an astounding 80% gain in less than 4 years. Whether or not this estimate can be considered feasible remains to be seen. We now turn our attention to Tesla, the well-known electric car manufacturer, and examine its outstanding accomplishments and bright future. By July, Tesla had taken up an amazing 20% of the global market for battery electric vehicles, BEVs, solidifying its dominant position. This puts Tesla's nearest rival 5 percentage points behind it. But sales of BEVs aren't the only area in which Tesla dominates. It distinguishes itself as one of the most lucrative participants in the automobile sector overall as well. Its feat of posting the greatest operating profit among high-volume automakers last year, which CEO Elon Musk credited to the company's excellent manufacturing technology, exemplifies this distinction. 3 strong reasons support the idea that investors will soon be able to enjoy sustained and possibly even higher profits. First off, compared to other automakers, Tesla is able to produce battery packs, the most expensive part of an electric car, for less money per kilowatt-hour. According to analysts and Cairn Energy Research Advisors, this competitive advantage is expected to endure for the next 10 years. Second, Tesla is building its Gigafactory Mexico, and the company has big plans for it. This plan is about to launch a cutting-edge manufacturing technique that has the potential to cut production costs by 50% and drastically reduce the physical footprint of the firm by 40%. Finally, Tesla's CEO, Elon Musk, has a bold aim for the company. He wants to see gross profit margins approaching 70%. This audacious objective stems from the fact that Tesla's business model will soon include the expansion of robotaxi services and the integration of fully autonomous software. Achieving this would represent a significant increase from the business's most recent gross profit margin of 21.5%. We are currently seeing a notable change in Tesla's trajectory as an artificial intelligence firm. Although most people know Tesla for its electric car expertise, the company is currently preparing to enter the AI software and services market, with its fully autonomous platform acting as the cornerstone of this transition. Tesla has 3 different revenue streams in mind for its self-driving technology. First, it plans to give drivers access to cutting-edge autonomous capabilities by offering FSD subscriptions. Second, in order to increase its impact in the automobile industry, Tesla intends to license its FSD software to other automakers. Thirdly, the business intends to use its FSD software to power a fleet of robotaxis, an idea that has great potential for the development of autonomous driving. With a large number of FSD-capable cars now on the road, Tesla is in the lead. More data is gathered by the corporation than by any other automaker. Notably, investing industry heavyweight Cathie Wood claims that Tesla has more data on autonomous driving than any of its possible rivals put together. given that the amount of training data an AI model receives directly correlates with its effectiveness. This data advantage points to better autonomous driving technology. Tesla's strategic placement has extremely significant ramifications. The business not only establishes a commanding presence in the booming electric car market, but also makes headway in the quickly developing autonomous vehicle sector. The fact that Tesla is still at the top of the electric vehicle market is quite important. This market is expected to increase at a significant rate each year, reaching a staggering 23% by 2032. It is anticipated to soar to an astounding $1.7 trillion, leading the way for Tesla. The company is well positioned to secure a significant portion of this enormous market because of its cutting-edge electric vehicle technology and broad acceptance. This results in significant income as well as reaffirming Tesla's position as a major force in determining the direction of sustainable mobility in the future. But Tesla has goals that go beyond just making regular electric cars. Equally impressive is the company's entry into the autonomous car space. This market is expected to develop at an incredible rate of 35% by 2032, indicating remarkable annual growth. It is predicted that the autonomous car market will grow to a staggering $2.4 trillion. Tesla is positioned firmly in the middle of this market revolution because to its cutting-edge driver assist features and vision for completely autonomous driving with technologies like fully self-driving cars. Given the continuous advancements and improvements in autonomous technology, Tesla is in a strong position to significantly impact the way that transportation is defined in the future. In addition, Tesla's audacious plan to mass-produce robotaxis, a project slated for completion in 2024, opens up a whole new range of potential. With this calculated move, Tesla can enter a market niche that is expected to grow to an astounding $9 trillion by 2030, according to ARK Invest. Robotaxis, the idea of autonomous cars acting as on-demand taxis, has the potential to completely transform urban mobility and transportation services worldwide. In addition to potentially making large profits from this market entry, Tesla establishes itself as a leader in the revolution in how people use transportation services and travel. Tesla's diverse strategy demonstrates its dedication to influencing artificial intelligence and the direction of transportation in the future. Expanding upon ARK Invest's convincing Tesla valuation model, their methodology clearly offers a holistic view of the company's possible futures. ARK Invest looks at a hopping 1 million different scenarios using an advanced Monte Carlo simulation, all of which project into 2027. The bear case, the base case, and the bull case are the three main conclusions that emerge from these scenarios. Shall we examine the bear case now? Under this cautiously pessimistic scenario, the 2027 price of Tesla stock is estimated to be $1,400 per share, which is a significant rise of 438% over its current valuation. According to this estimate, ARK believes Tesla will make about $769 billion in revenue by 2027. Remarkably, electric cars continue to be the largest source of income, accounting for 46% of total income. With an annual revenue growth rate of 60%, this segment illustrates the consistent demand for Tesla's electric vehicles and shows the company's resilience in maintaining a solid market position in the face of adversity. Furthermore, robotaxi services, which are expected to generate 34% of revenue, become increasingly significant in this scenario, suggesting the growing significance of Tesla's autonomous products. The remaining 20% of revenue comes from a variety of sources, highlighting Tesla's diverse revenue streams. These sources include energy storage and insurance. As of right now, the base scenario shows that Tesla's stock price might rise by an astounding 669% to $2,000 per share in 2027. According to our case estimates, Tesla is expected to reach a significant revenue milestone of $1 trillion by 2027. In this scenario, electric vehicles continue to be the dominant force, accounting for 47% of total revenue. This demonstrates Tesla's consistent market share rise in electric vehicles, which is being fueled by its cutting-edge technologies and growing range of products. Notably, with over 44% of revenue coming from robotaxi services, notable progress is made. The company's strong 69% annual revenue growth rate is indicative of its ability to significantly disrupt the transportation business by utilizing its autonomous capabilities. The other 9% comes from a variety of sources, which emphasizes Tesla's deliberate diversification. In the most optimistic scenario, Tesla's stock price finally soars to an incredible $2,500 per share in 2027, providing an unparalleled upside potential of 886%. According to ARK Invest projections, Tesla would achieve a revenue peak of $1.2 trillion in 2027, which would be consistent with its remarkable growth trajectory. The majority of revenue is generated by electric vehicles and robotaxi services, which account for 48% and 49% of total revenue, respectively. This highlights Tesla's dominant market position in the domains of autonomous driving and electric vehicles. The company's impressive 76% annual sales growth rate demonstrates its ability to use its cutting-edge technologies and take advantage of new trends. The other 3% of revenue comes from other sources, which demonstrates Tesla's versatility in finding and making money from several directions. Despite their differences in optimism, all three scenarios taken together offer a complex picture of Tesla's future. They highlight the characteristics of the markets for autonomous driving and electric vehicles, as well as Tesla's chances of success in this changing environment. Given that the company's trajectory is still determined by a combination of innovation, market factors, and execution, investors considering Tesla must assess these scenarios in light of their risk tolerance and long-term investment objectives. Thus, investors are presented with a range of possible outcomes by ARK Invest's thorough valuation model, which highlights Tesla's exceptional growth prospects in a variety of conditions. The company's diverse strategy, which includes electric cars, driverless technology, and other cutting-edge revenue streams, is reflected in these estimates, which increase confidence in Tesla's bright future. Now that we are considering if investing in Tesla stock is worthwhile, it is evident that Cathie Wood and ARK Invest's thorough valuation models offer priceless information. On closer inspection, though, it does seem that all three scenarios are predicated on fairly lofty assumptions. It might appear highly optimistic to think that by 2027, Tesla stockholders could realize profits ranging from 438% to an astounding 886%. However, there's an interesting story to think about. The transportation and mobility industries may undergo significant disruptions as a result of Tesla's possible shift into fully autonomous software and robotaxi services. If carried out properly, this change could open up hitherto unheard-of growth prospects for the business. Furthermore, it's important to note that Tesla's current value, at 9.6 times revenue for its shares, is lower than its 5-year average of 11.2 times sales. This implies that the stock might be cheap right now, making it a compelling investment opportunity. Even while it's important to recognize the dangers that come with investing in a firm that prides itself on innovation and volatility, patient investors who can take calculated risks might find it advantageous to start small with this growth-oriented stock. Investing in Tesla ultimately comes down to a person's investment horizon, risk tolerance, and confidence in the company's ability to successfully navigate its ambitious change. There you have it then. We've started a trip into the complex world of Tesla today, from its astounding rise in the electric vehicle market to its bold ambitions in the fields of autonomous driving and artificial intelligence. In addition, we have investigated the nuances of ARK Invest valuation models, which present a range of possible scenarios regarding Tesla's future. As we come to an end, let's consider a few important queries. Are Tesla's high growth estimates realistic or overly optimistic? What effects would Tesla's move to robotaxi services and AI software have on the transportation sector, and how will disruptive technologies and innovation affect Tesla's future? Please remember to like and subscribe to Tesla Stock News for additional updates if you thought this video was enlightening. I appreciate you watching, and I'll see you soon.